Hello everyone, my name is Fadhila Arvianda and I'm from Universitas Indonesia. I will take this opportunity to present my research about investor attention and Indonesian IPO. First of all, this is the presentation outline. First, we will talk about the introduction and then the literature review and hypothesis, and then the methodology. The next is results, and the last one is the conclusion. Introduction. The IPO activity always gets interest from researchers regarding the two phenomena that frequently occur, that is IPO underpricing in the short term and underperformance in the long term. An IPO indicated to experience underpricing when its close price on the first trading day is much higher than the offer price, and the return generated in the first trading day is very high. The phenomenon was first explained by Legrand et al., who found that IPO underpricing occurred in various countries with highly varied rates. The next is IPO underperformance. IPO underperformance is the condition when the return generated by the IPO stock is way lower compared to the return of the market or any other comparison company. This phenomenon was first explained by Ritter in 1991, who found that in the United States, the IPO is tend to be underperformed in the long term compared to the comparable companies in the same industry and company size. For the companies that will carry out IPO, it is important to provide a sufficient amount of information to the investor and attract their attention, as the information that the investors have about an IPO will affect their investment decision either to buy or an IPO or not. Merton assumes that an investor will invest in a security which they already know the information. This assumption leads to a notion that investor attention obtained by an IPO will affect its performance. Da et al. 2011 formulated a new proxy which measured the investor attention. They use the search volume index in the Google search engine, and it is generally called the search volume index. This measurement is considered to be more relevant with the current condition of information development, where investors of any citizen can directly access information through the internet. This paper has two steps of research. First is analyzing the IPO performance of the listing companies in Indonesia in the short and long term, and verify by statistical tests either there is IPO underpricing and IPO long-term underperformance phenomenon in Indonesia. Historically, some previous research have been able to prove the existence of IPO underpricing in Indonesia, but there's only a few that can prove the existence of IPO long-term underperformance. Therefore, this study will utilize the latest IPO data available to test whether these two phenomena are statistically proven to occur in Indonesia during the study period. The second step is examining the effect of investor attention to IPO performance in the short and long term, which is measured by initial return and buy and hold return. Investor attention will be measured by Google Search Volume Index, as Google is the most used search engine in Indonesia with the market share approximately 69%. Several research have been demonstrated the IPO underpricing phenomenon around the world, including Indonesia, and also factors affecting the condition. First is Bolton et al. That present the data variation in the level of IPO underpricing in the world, which range between 1.2% in Argentina and 69.7% in China. Teti and Montefusco 2021 proved that port size has a significant negative effect on IPO underpricing, and institutional ownership and ownership concentration have a significant positive effect. Naiboru 2019 proved that underwriter reputation and board size have a significant effect on the level of underpricing in Indonesia. This figure shows the latest data from Indonesian IPO within 2014 up to 2018. It can be seen from the data that the average initial return from the IPO share that listed in 2014 is 22%, and in 2018, it's slowly increasing to 49%. This data indicated that there is underpricing phenomenon in Indonesia. So our first hypothesis is there is a significant IPO underpricing phenomenon in Indonesia. The next is the past researchers have proved that the IPO long-term underperformance phenomenon was observed in several countries. Some of them are Jawortowski and Lizinska 2012 found that there was a negative long-term underperformance in Warsaw Stock Exchange. Mayburu 2019 proved that there are IPO long-term underperformance in Indonesia in 6, 18, and 24 months after the IPO date. Tasikirono, Sumiati, and Indrawati found that asset value, age, profit, and underwriter reputation are determinants of long-term market performance of IPO. This figure shows the performance of IPO in Indonesia within 2014 up to 2018 period. It can be seen that in the long term, in the 36 months after the IPO, out of 139 companies, 99 companies underperformed the market performance and only 49 companies that outperformed. This fact indicates that most of the listed companies in Indonesia which go public within 2014 up to 2018 experiencing long-term underperformance. Hence, our second hypothesis is there is a significant IPO long-term underperformance phenomenon in Indonesia. Ga et al. 2011 proved that investor attention has a significant effect on IPO first-day return, where IPO with low surge volume index in the last week prior to the IPO have lower initial return than the IPO with high surge volume index. Pockerman 2015 also obtained the same result, where IPO with high investor attention had a higher initial return compared to the IPO with low investor attention. Though 2018 documented the similar results with the previous study, namely that there was a significant positive effect of SVI in the last 5 days before the IPO with the initial return. With these three references, our third hypothesis in this study is investor attention has a significant effect on IPO short-term performance. The et al. 2011 also found that investors' attention was significantly able to predict IPO long-term underperformance in 52 weeks following the IPO. They proved that when an IPO with a high initial return received high investor attention prior to the IPO, the return would reserve direction in the long term after the IPO was implemented. Pockerman 2015 documents the similar results, where high investor attention before IPO will lead to significant stock price revision for a period of 6 months and 1 year after the IPO is carried out. Zhao 2018 carried out the same research procedure and obtained significant but weak results, namely in the 2-year period after the IPO was carried out. So our first hypothesis is investor attention has a significant effect on IPO long-term performance. For the methodology, we used a sample of 109 companies that carried out IPO within 2014 up to 2018 in Indonesia Stock Exchange. The research period is taken as the latest available data set that can be calculated for its long-term performance up to 36 months after the IPO date. Data was collected through several research, including Indonesian Stock Exchange, prospectus of the companies, yahoofinance.com, and the trends.google.com. In this study, it will be proven whether the phenomenon of IPO underpricing occurs in Indonesia or not with the following steps. First is to calculate the IPO initial return, and then calculate the abnormal return, and then proving the phenomenon by using one sample t-test and non-parametric Wilcoxon sign rank test. The proxy initial abnormal return is used to prove the phenomenon because it measures abnormal return, namely the rate of namely the return that exceeds the market rate of return generated by IPO share. By testing the initial abnormal return, it will be proven whether IPO in Indonesia generate returns that are greater than normal returns or not. With the hypothesis 0 defines that initial abnormal return is not equal to 0, then if the mean or median value of initial abnormal return is significantly and positively different from 0, it can be concluded that IPO Indonesia yields higher returns than the normal return. Furthermore, to test the effect of investor attention on IPO performance in the short term, the initial return measurement will be used. Initial return is used to measure the effect of investor attention obtained by an IPO on the actual return generated by the IPO. To measure the IPO performance in the long term, several time points after the IPO date have been determined: 6 months, 12, 18, 24, 30, and 36 months. In this study, it will be proven whether there is a long-term underperformance phenomenon or not with the steps as follows. Calculate the IPO's long-term return by the buy and hold formula, and the next calculate the buy and hold abnormal return, and then proving the phenomenon of IPO long-term underperformance by using one sample t-test and Wilcoxon sign rank test. Similar with the explanation of the initial abnormal return above, the proxy buy and hold abnormal return is used to measure the IPO return that exceeds the normal return. If buy and hold abnormal return is positive, it indicates that there is a very high return exceeding normal return. On the other hand, if the buy and hold abnormal return is negative, it indicates that there is a very low return compared to the normal return. Furthermore, to examine the effect of investor attention on IPO performance in the long term, the buy and hold return measurement will be used. The buy and hold return proxy is used to measure the effect of investor attention obtained by an IPO on the actual return generated by the IPO in the long term after the IPO is implemented. And investor attention will be measured by Google Search Volume Index, and this is the calculation we are using. This is the calculation used by the et al. At 2011. So the Google Search Volume Index is the data scale from 0 to 100. The scale is the number of search for certain keyword compared to the total search in an area at the same time. This is the example of the data. So there are two research models that will be used in this study. This is the first one to test the effect of investor attention on IPO performance in the short term, and the second one is to test the effect of investor attention on IPO performance in the long term. So this is the result for the first result from one sample t-test and Wilcoxon sign rank test of initial abnormal return. It is showed that the mean for the t-test for the one sample t-test and the median for the Wilcoxon sign rank test, both are showing a significant result. From the both test result, it can be said that there are a positive abnormal returns generated by IPO shares on the first trading day on the secondary market. Overall, it can be concluded that in the period 2014 up to 2018, there was a phenomenon of IPO underpricing in Indonesia. This confirms our first hypothesis. This is the second result from the buy and hold return. So one sample t-test showed significant result at time point 6, 12, and 18 with positive result, but do not show a significant result at time points 24, 30, and 36. This proves that hypothesis 0, which states that the mean value of BHAR is equal to 0, cannot be rejected for the time points of 24, 30, and 36. But the result of the Wilcoxon-Fine rank test showed significant results for the time points 24, 30, and 36, which with this result, then hypothesis 0, which states that the median of the buy and hold abnormal return equals 0, can be rejected. From the two test results, it can be said that there are abnormal returns generated by IPO shares at 24, 30, and 36 months after the IPO. The negative median abnormal return value indicates that the most of the IPO stock produces a lower return than the market return. Overall, it can be concluded that in the period 2014 up to 2018, there was a phenomenon of IPO underperformance in Indonesia in the long term. This confirms our second hypothesis. This is the third result. To prove the effect of investor attention on the IPO short-term performance, proxied by initial return, a regression was performed for the first model. This result shows a significant positive effect of investor attention on short-term IPO performance, as well as a negative effect and significant from the size of the Board of Commissioners and the independence of the Board of Commissioners to the initial returns. There is no proof that Company H has a significant effect on initial return. Hence, we accept our third hypothesis that investor attention has a significant effect on IPO short-term performance. This is the fourth result. To prove the effect of investor attention on the performance of the IPO in the long term, a regression was performed for the second model. The regression results for the independent variable abnormal search volume index on the dependent variable buy and hold return, together with the control variables, Company H, underwriter reputation, and the number of IPO proceeds, as shown in this table. It shows a significant negative results at time point 24, 30, and 36 months after the IPO date. Next, the et al. 2011 conducted one further regression, namely testing the interaction variable of investor attention and first-day return on IPO performance in the long term. We followed the procedure, and the test result shows the significant negative effect of abnormal search volume index variable at the time points 24, 30, and 36 months on buy and hold return are greater by including this interaction variable. So the conclusion is, from the results of the first stage of data processing using the one sample t-test and Wilcoxon-Fine rank test, it shows that IPO in Indonesia experienced IPO underpricing in the short term, and experiencing IPO underperformance in the point of time to 24, 30, and 36 months after the IPO was carried out. This is consistent with the argument that over time, the value of the IPO will get closer to its fundamental value. The result of OLS regression from the investor attention model on initial return showing a significant positive effect, both individually and together with the control variable board size, board independence, and company age. This proves that investor attention has a significant effect on IPO performance in the short term. The regression result from the investor attention model on buy and hold return show a significant negative effect at the time point 24, 30, and 36 months after the IPO was carried out. When the regression was performed by adding the interaction variable, the significant negative effect of investor attention was higher on buy and hold return. So results of the long-term performance model regression indicate that the high initial return that occur in IPO in Indonesia are driven by high investor attention, and in the long term, high attention IPO who experience underpricing will experience a decrease in performance. In this study, it was proven that the decline occurred within 24 months after implementation of the IPO. These results are in line with the research results of Da et al., Fuckerman, and Zhou, which prove that increased investor attention before the IPO will lead to an increase in initial return in the short term and result in reversal of IPO performance in the long term. Overall, it can be concluded that investor attention has a significant effect on IPO performance in Indonesia in the short term, namely on the first day of trading, as well as in the long term, namely 24, 30, and 36 months after the IPO was carried out. So that's all. Thank you so much for your attention. Goodbye.